Okay, so now it's time to take another look at the S&P futures. The last setup that I had talked about was time and price at this last low, which gives us the initial upside target at this 28-24 area, give or take. Now, one of the things you have to remember is that we don't always make the targets, but we've already seen a beautiful rally off of this zone, and obviously my subscribers get it first. But we do seem to be headed that way, but what do we need to worry about? Okay, so since I did timing to give you the potential low, we also want to do timing to see when there is resistance to this current rally. So let's just go through that and see what we can find. I'm going to measure, in this case, these prior low to high swings and then project them from the recent low. So there's one date on the 17th. Let's try the next one. Another date on the 18th. So what's that, Tuesday and Wednesday so far? And we can try this last swing here. Low to this high. And that gives us the 16th. Okay, so that's, Monday through Wednesday, we're starting to see some cycles. Now that's just from the alternate time projections, from taking these prior rally swings and then projecting them from this low. Then we would also want to look at some of the other swings. So for example, taking a prior high to high and see if that comes in anywhere soon. All right, we do have a high to high, and the 1618 cycle of that one also comes in on the 18th. We can also look at this low to low swing. So let's take that low to this low and see where that might come in. Okay, actually that's where I would focus on the 618 retracement in that case. So that's the 19th, and I think we might be beyond these others. So I'm just going to check it real quick. Yeah, we're beyond that. What about this low to low? Actually, if we take that low to low, we've got a 1272. Oh, sorry. No, all right, yeah, we're beyond that, so forget that one. And then let's try one other swing in time where I take this prior high to this low, and let's see, the 1272 extension comes in on the 19th there. So what I'm typically looking at is something like a 1272 or a 1618 extension of this swing in time, and that would come in on the 19th. So you end up having 1, 2, 3, 4, 5, 6 cycles anywhere between the 16th through the 19th. So if we continue to rally into that next time window, I'm going to tell you to ratchet up stops. I'm not going to try and get you to pick the top of the market. I know that there will be some of you that will consider the counter trend trade, but I'm certainly not going to put that out to the general public. So definitely ratchet up stops as you go, because many moves tend to terminate at extensions of prior swings, and then many moves tend to terminate when you see a clustering of time cycles. So all there is to say here is just protect profits, especially when you get closer to that resistance in price and time.